you're trading for too long each day, you may actually be making it harder for yourself to become profitable. And I know that seems crazy because logic pretty much is simple, right? The more time in the market, the more opportunities I have. The more opportunities means the more trades I can take. And the more trades I can take, the more money that can be made. Except, in reality, that's not how it actually works. In fact, spending too much time in front of your charts, that's what leads to burnout, overtrading, forced trades, and some of the most expensive mistakes that you'll make as a trader. So in today's video, I'm gonna break down how many hours you should be spending in front of your charts as a day trader, when exactly you should be trading, and why spending less time in the market will actually make you a better trader. So let's debunk some of these myths about day trading. First and foremost, day trading isn't a get-rich-quick scheme. And I know a lot of traders think it is because of the nature of day trading. You're trading a faster market, which means more opportunities and more trades and more action and more profits. Yeah! And because all of that's done on a shorter period of time, we think the money should come in faster. But that's rarely how it actually works. Now, with that being said, going on to the other side, day trading isn't a scam either. And the reason people think it is, and the reason that day trading gets a bad rap in general, is simply because of how many people fail. But if we look across the board in trading, whether it's day trading, intraday trading, swing trading, whatever, a lot of people fail regardless of what time frame they're trading. So the real issue isn't necessarily the day trading. The real issue is traders having the expectation that they can jump into the markets right away, make a bunch of money really quickly, and completely turn around their financial situation without putting in the time, energy, or effort needed to actually become good at trading. And that's exactly where that scary 90-90-90 rule comes from. If you never heard of it, it's that 90% of traders lose 90% of their funds in the first 90 days of trading. And I don't really want to get caught up in the exact statistics of it and whether it's 100% true or not, although talking to many brokers out there, it seemed to be pretty accurate over the years. But here's the part that I do think is important because I don't want you to get intimidated. The reason that those numbers are so high, 90-90-90, is that because a lot of people that actually enter trading aren't actually traders. Rather, there are people looking for a shortcut. There are people looking for that next big opportunity that's going to make them rich quickly. And once they realize that success in trading takes time, energy, discipline, and a lot of failure along the way, they simply move on to something else. And eventually, they become a new statistic wherever they go to, whether it's online poker or sports betting or whatever get-rich-quick opportunity they find next. The point is, the problem isn't necessarily the vehicle. The problem is the mindset that they bring to the vehicle. So now that we spoke about what day trading isn't, let's talk about what day trading is. Day trading is really nothing different than any other type of trading. The biggest difference is simply the time frame in which you're operating on. I mean, think about it. You're still analyzing a market. You're still looking for specific opportunities. You're still, hopefully, following a rules-based trading plan. You're still managing risk. You're still identifying situations where you believe the probabilities are in your favor. The only difference is the duration of the actual trade. Instead of holding positions for hours to days or days to weeks, a day trader is typically holding their positions from minutes to hours. And because of that, day traders tend to have a little bit more of a mercenary type of mindset when it comes to the markets. It's very direct. You're getting in, you're looking for the specific move that you're expecting, you're getting your money, and then you're getting out or moving on to the next opportunity. And the coolest thing about day trading, at least for me, is that each day is its own separate battle, meaning that I'm not carrying positions over from one day to another. I clock in, I do my work. Once my time is up, I clock out. I either win, I either lose, but regardless, I come back the next day and start anew. And mentally, that's really refreshing, especially as a swing trader who often stays up late at night and has nightmares about open positions doing weird things as weird Japanese news comes out. Yeah. So, as you can see, there are some pretty cool advantages of day trading, but there are also some significant disadvantages as well if you don't manage your time properly. Now, in a second, I'm going to tell you a little bit about one of the biggest day trading mistakes that I see, but I want to give you some background information first before we hop into it. If you're new to my content, my name is Akil Stokes. Welcome. I'm horrible at introductions, but I've been trading since 2007, right? I started in the stock market. I did really, really good in the stock market. And then 2 years later, I switched over to Forex, mainly because I was sold on the dreams of making more money by using less money in a quicker amount of time, all the stuff you still hear to this day. I then struggled for a while before eventually getting good. I became a successful money manager, and I am now a coach over at Tier 1 Trading, where I work with aspiring traders and pretty much help them achieve the same thing that I achieved. And I bring this up because I was on our platform the other day having a conversation with one of these aspiring traders who was looking to get into day trading. And during the conversation, he mentioned that he had a plan that he wanted to be a day trader, and he wanted to actively trade from the hours of 7 a.m. all the way to 10 p.m. Yes, you heard me right. 7 a.m. to 10 p.m. 15 hours a day. Whew. And I'm usually pretty open with my coaching style, meaning that yes, there are some hardcore things that you must do and some paths that you must follow if you want to be a consistently profitable trader. But within all that, I'm pretty open to you creating your trading plan and your trading rules and your trading strategy or trading lifestyle, I guess you can say, however you want. So I rarely step in and say, yeah, you probably shouldn't do that. But this was one of those times where I actually felt obligated to step in and say, you probably shouldn't do that, because 15 hours a day in front of the charts, well, that is a recipe for disaster. Which reminds me that the other day I actually asked you guys over on the YouTube community page about if you were a day trader, how many hours a day do you think you would trade? And here's what you said. About 80, well, let's put it like this. 4% said 7 to 10 hours a day. 6% said more than 10 hours. 10% said 4 to 6 hours a day, and a whopping 80% said only 1 to 3 hours. Now, I'll tell you what my day trading hours were in a little bit and explain kind of my opinion on how long I think we should be trading as day traders. But just to bring back what I said before about a recipe for disaster, when I say it's a recipe for disaster, I just don't mean for your trading account. I also mean mentally, physically, and emotionally. And let me explain why. So when it comes to the average human attention span, there's a stat that's often thrown around that says, as human beings, we can't pay attention for more than 8 seconds. So 15 hours, 8 seconds, there's a big difference there. Now, obviously that stat's a little bit misleading, as we can certainly pay attention for more than 8 seconds. The reality is actually this. When we are actively focused on a very specific task, we can certainly pay attention and stay focused for a lot longer. And we're talking maybe 45 minutes, maybe 90 minutes if you're like really, really, really enjoying what you're doing. But no matter what side of that range you're on, I think we can agree that it's still a pretty long ways away from 15 hours, 10 hours, or anything prior to that. And remember, we're not talking about 10 hours of sitting at your desk watching Netflix with maybe some charts in the background, right? No, we're talking about 10 hours of actually scanning the market, right? A really high level of focusness, right? 10 hours of analyzing, 10 hours of updating charts, 10 hours of making very important decisions with a lot of money on the line, 10 hours of staying mentally engaged in the market. This is 10 hours of focused work, and focused work drains your mental battery. And when that battery starts to run low, that's when you approach something called burnout. If you're not familiar with the term burnout, burnout is essentially a state where your mind and or body becomes mentally and physically exhausted. And it often comes as a result of a state of prolonged or unmanaged stress. And again, this state doesn't just affect your trading, it affects you as well, right? Physically, you can experience things like headaches or muscle tension or fatigue or having trouble sleeping. It could even break down, I'm having a brain fart right now, your immune system, I guess it is, yeah, and cause you to be at higher risk of getting sick. And that's just the physical side. Mentally, it could be even more dangerous as a trader as you start to experience something called brain fog, where you have trouble focusing, where you start forgetting small details where your decision making becomes delayed or slower. You can also become more irritable, right? You have less patience, your fuse gets shorter. And what I mean by that is like things that normally wouldn't bother you, all of a sudden start bothering you in a big way. And again, that's a pretty dangerous combination when you're trading with money at risk. Because trading is stressful enough as it is. I mean, think about it. Trading is stressful enough in its own right? It requires you to have this heightened level of focus. You have to kind of recognize all the different things that are happening on the charts. You got to make decisions very, very quickly. You need to execute on those decisions with live money at risk. And you have to do all this while simultaneously battling wave after wave of emotional demons being thrown your way. I'm having a weird nostalgic moment right now, but for you guys that used to play video games, it reminds me of the video game called Dynasty Warriors, where pretty much it was you and maybe a few friends, and you would just battle like hordes and hordes of armies until the end of time. That is the best analogy or visual representation that I can give of what it's like to battle those psychological demons while trading. Dynasty Warriors. Great game. Anyway, so when you look at it that way, it's pretty easy to see why, if you're going to be glued to your charts for 10, 12, 15 hours a day, why it can have such a massive impact on your trading results, probably in a negative way. Well, what's the solution? Well, it's probably a pretty obvious one, but the solution that I gave to this trader was trade less. Simple. Even if you can technically manage yourself through 10 hours a day by taking breaks and whatnot, maybe walking away from the charts and doing different things like that, do you really want to spend 10 hours a day sitting at your trading desk? I certainly didn't. Back when I was day trading, my day trading hours, my active day trading hours, were typically anywhere between 1 to 4 hours. It started off as a 4-hour window, then it went to a 3-hour window as I eventually kind of eased myself out of day trading. And one of the reasons that I eventually stopped day trading was because of that. I wanted more free time. Because let's think about this for a second, right? Why do so many of us get into trading into the first place, right? We always say financial freedom, but it's not just that. It's actually the thing that financial freedom buys us, and that's time freedom. What is time freedom, you ask? Well, it's the ability to do whatever you want, whenever you want to. It's the ability to control your schedule, right? It's the ability to spend time with your family, to travel, to just do things that you actually enjoy. So it doesn't make much sense to become financially free by spending your entire day in front of a computer screen. It kind of defeats the purpose. And as I think about a great book from one of my great friends, Always Free, from Jason Greystone, one of the things that he always mentioned to me is that as he talked to a lot of millionaires and billionaires and a lot of these really, really, really wealthy individuals, he noticed that a lot of them were miserable because yes, they had all the money in the world, but it also required all the active time in the world to keep making all the money in the world. And it kind of defeated the purpose. Now, another thing, and this is probably more practical to the actual trading side of things, there's just not that much action in the market throughout the entire day, right? Don't get me wrong, there are periods where there's a lot happening, right? We have some very specific sessions that hold the vast majority of the trading volume throughout the day. But there are also periods where zilch, zero, snooze fest. And those can be some of the most dangerous periods because as you're bored watching paint dry on your charts, your mind starts wondering, your mind starts creating things, and before you know it, you're involved in a trade that you really shouldn't be involved in. And we all know if you're in a random trade, you get a random result, which is usually a loss, and there goes the account. So my advice for anyone that's going to go on to be a day trader is, as you're developing your trading plan and your daily routine, try to pick the hours when the market is actually moving. For you guys watching the video version of this, if you look at the chart in front of you, right, that is a image that's going to represent the different Forex trading sessions, right? You have London, you've got New York, you've got Sydney, you've got Tokyo. These are just kind of the four basic kind of sessions that we call them, and you don't have to be super literal with them. And essentially what these four sessions represent is the entire 24-hour market session. Now, looking at the chart, you're going to see like a paint type of figure. If you're a chartist, it looks like the anchored volume profile tool, right? It's going to come out from the side of your chart. And what that represents is the amount of volume or the amount of liquidity that is present during that specific period of time. And what you should notice is that there's a very specific window where the majority of the activity takes place, right? There's roughly this 3-hour window that overlaps the second half of the London session and the first half of the New York session. These are the two most popular markets, by the way. And you can see that that's where the most significant amount of trading occurs throughout the day. Now, again, if you're listening to the podcast and you can't see the chart, I apologize. But during that period I just mentioned, second half London, first half New York, we're pretty much seeing about 35 to 40% of the day's volume occur during that time, while much of the rest of the day is significantly smaller, aside from a few spikes at like the openings of some sessions, specifically like the London Open, for example. And again, this is important because it shows you something, right? It shows you that you don't necessarily need to be in front of your computer the entire day to participate in the markets. You can build your trading schedule around when the markets are actually active. I am not a fisherman, so this is probably going to be a very bad example, but I would think that as a fisherman, I would want to fish during the times of the day or year when the fish that I want to catch are actually in the area that I'm fishing at. Sorry if I butchered that. Not a fisherman. The point is, and sometimes I fail at these analogies, I know, but there's a much more efficient way to approach your day trading instead of saying, I'm going to be active from 7 a.m. to 10 p.m. You can say, hey, these are the few hours of the day where the market I'm trading is most active, and therefore I'm going to focus my day trading hours specifically during that session. And when that window's over, I'm done. I'm gone. I go enjoy my life. So what does this all mean? Well, it means this. Less trading hours equal less opportunity for burnout. Less time sitting in front of the charts equals less opportunities for you to make costly mistakes. And all of that equals more time to do the things in life that you actually want to do. And isn't that the reason you got into trading in the first place? It's not about making money. It's about what that money and the freedom that that money can buy will allow you to do. So if you're currently trading for 8, 10, 12, 15 hours a day, I want you to seriously ask yourself this question. Do I actually need to be trading this much? Because you may find out that becoming a better trader doesn't require more time in the market. Rather, it might require that you spend less. And to me, that sounds like a win-win. Do me a favor, like this video before you go, hit that hype button if you're able to. Speaking of winning, take the challenge and let's see if you can win by taking this trader quiz. Most people didn't get all the questions right. Will you?